What is your view of the regional banks? Are you concerned about the entire space right now, or do you have concerns about the entire space, or is it just individual names that you think investors should be worried about?
Well, I mean, you never know, Frank, but it looks like a tempest in a teapot, if you will, because you're talking about with Western Alliance, and Zion's very small and sort of one-off. It looks like at the moment 60 million, and I think what we know about what's happened in the banking system since we've had the frights in '08 and in '23, that the system is pretty strong. So I think what you're seeing really is about sentiment and the fact that the market is nearly 23 times. So it's due for a pullback. I think it's in a consolidation phase. So I think feeding into the government shutdown, the tariff right on Friday, where you see the market really down strongly, but then a rebound on Monday, which, by the way, retail investors have been leading the charge since April in terms of these pullbacks. So I think you'll see after a day or two, retail investors will start to come in and support the market here.
So you're saying a tempest in a teapot, but we're looking at the VIX right now at its highest level since April, going all the way back to the tariffs. It seems like investors are very concerned. Should they be concerned about other impacts from what some people would call loose lending? We had one of our guests push back on that, but certainly some credit issues in various spaces.
Look, I think we always have to ask that, particularly when you've seen the amount of private credit that's been exploited. We just had the big banks report, JP Morgan, Wells Fargo, you had Goldman Sachs, Morgan Stanley, and they mentioned nothing about this, and they would certainly see that. They would see cracks in the system. So I think, having just had these reports, and they were all very strong across the board, I think it probably is going to be just, one-offs. But of course, that sentiment, until we have a little more information, could persist for the next few days.
All right, let's get to your word of the day. It's wariness. What do you worry about? You're saying this isn't a big issue. The VIX spiking is a big issue. So what's actually a big issue to you, Barbara Doran?
Well, I'm not saying I'm complacent here. You always have to look at all these things and review your strategy and what you're thinking. But, the wariness really is because of this almost 23 times. You're always set for a fright that will happen. And also, there's still so many unknowns out there. Right now, we don't have any economic data. We're getting what seems to be good proxies through private companies or the Blackstones who really look at these sorts of things. But what is really going on with labor? It looks like definitely the labor market is slowing. Right now, we're not seeing layoffs, but it looks like it's imbalanced. But will that change? Also, the Fed. The Fed, it's baked in right now, I think, 2 more 25 BIP cuts this year coming up at the end of October, then, in December. So, but will that really happen? Because they're so dependent on the data and inflation. It looks like it's creeping up a bit. Does it just continue to creep a little bit and stall out here? Or will the tariffs, start to really have an impact? We don't know. This is the wariness in terms of some basic fundamentals here in the market.
Well, one thing, Barbara, I think we're starting to get some data when it comes to tariffs. As a matter of fact, S&P Global out with a report yesterday that tariffs are going to cost global businesses $1.2 trillion this year, impact margins negatively, of course, by 64 basis points. I mean, aren't we seeing the impact and maybe just the beginning of that impact? And should it lead us to have some concerns about earnings season?
Well, I hear two questions there. And Frank, yes, we had to pay close attention because, as we know, there's been a big lag effect given the uncertainty. I mean, there's ongoing changes in the tariff policy. We saw the threat against China on Friday. Even yesterday, they've extended the tariff relief from 25 to 15% for auto parts, European cars from 2 to 5 years. So there's still lots of change. But I think what you're seeing is that companies have, they've been on hold, labor, CapEx. What do we do here? And that's taking a while, for companies to make that decision. Do we raise prices? Who's absorbing all these things? So I think that, that has to smooth out. And we have to see. So, and Frank, what was the second part of your question there?
Well, I want to get to your pick before we run out of time, Barbara.
Oh, okay.
Your pick first today is T-Mobile. Now, I think a lot of people would see that as a defensive pick. Is this a defensive pick, or are you seeing this in some other way?
Well, it's both ways, because I think the stock has lagged here versus AT&T. AT&T until today has been up 15% year to date. This is up just over 2%. It's trading, even though it's 21 times earnings, it's less than its historical range of 30-35%. They report next Thursday. Expectations, for some are that they could beat numbers there. They are gaining share in both the mobile and the broadband. They're getting more average revenue per customer, and so they're really doing well. That Sprint acquisition back in 2020 was done brilliantly and is really up their game. So they are now one of the leading providers there. And of course, they bought U.S. Cellular. Deal closed August. That's gives them more entrance into the rural system. So I think you're going to start to see some good numbers, and people will start to pay attention to this.
All right.
And again, in this market, you're looking for laggards.
So one question for you, though. This is a consumer-facing stock. Any concerns about weakening consumer, a weakening labor market impacting their ability to sell?
Well, yeah, another good question, Frank, because I think there is still a question like with the immigration. That's a part of their business, that it is for everybody. How's that going to impact right now we're seeing, the higher end consumers still spending. You're hearing from the airlines, the credit card companies, and of course we know the amount of wealth that's been created since 2019 for households is 40-50 trillion. So there's still a lot of money out there, and that's really what I think has been supporting things. Consumer spending, it's hurt a lot in the lower income because that's where they're seeing price increases in food, et cetera. But there still seems to be plenty of consumer spending power out there.